Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, on to stocks that will be reacting to earnings today. ACC reported a good set for the Q2 of calendar year 18. Nigel tells us the key highlights of the quarter. Nigel, good morning. Over to you.
Well, good morning. The numbers look quite good, actually. They came post-market yesterday. And let's start off with the top line itself, because it was a top-down beat. We were working with numbers of around 3,600, 3,650 odd. It came in at more than 3,800 crores odd. That's because the capacity utilization levels have moved from around 85% closer towards 90%. So that's point number one. And secondly, the cement volumes as well came in at the higher end of expectations, at around 7.2 million tons. Not just that, the RMC business, it contributes only around 10% to the top line. But out there as well, we did see in million cubic meters, they delivered a growth of close to around 22%. So things look good on the volume front as well as capacity utilizations. Operating profit as well, we were bracing ourselves for a sharp margin contraction. That didn't really happen because the operating profit was down only around 2% approximately, and margins compressed by roughly around 200 basis points. You need to keep in mind there was a one-time employee cost as well. So stripping it off that, the margins would be more or less flattish. How did that happen? I told you RMC business is only 10% of the top line, but the EBIT out there jumped up big time. So we did have the revenue number that was up by nearly around 17% approximately. But the EBIT number, that was up by more than 70%. The freight and forwarding cost out there, we had a jump of around 19%, but that's fair. When you have volume growth of around 11%, you have that going up by around 19%. So that's telling you that they're putting various measures to reduce cost. And that's really, showing out there, because other expenditure is down around 1% when you have volume growth of more than 10%. The profit number as well beat expectations on a better operating profit. Morgan Stanley, they have come out with a note. They have an overweight rating on the stock, target price of around 1,888. They are saying that since the company is running at 89% capacity utilization levels, now all focus will be on margin expansion.
All right, Nigel. Thanks a lot for cement. Let's move to the metal space then. Hindustan Zinc, the numbers, they were below estimates?
Well, it came in the last 5 minutes of trading session. That's how we're quickly going to run you through the numbers. That missed expectations. Now, on the top line itself, we were working with a number of around 5,420 crores. That was a bit of a miss of around 100 crores. That's because, in fact, the zinc volumes, we're expecting it to come lower. It did come in at the lower end of expectations. Remember, all the volumes that came out of there in the past quarter, that's really coming in from underground mining, because the open cast mines are totally shut as of now. The zinc cost of production as well, that jumped up by a good 11%. That's moved to around more than $1,000 per ton. Now, they've guided for around $925 to around $950 per ton. So from here on, costs will have to dip, particularly in the second half of this fiscal year. Operating profit as well was a bit of a miss. We were expecting a number of 2,900 crores, came in at around 2,700 crores odd, and margins did see some compression. The profit number, well, that came in lower than estimate, came in at around 1,900 crores. We were working with a number of around 2,100 crores. Not just a weaker operating profit, we also had other income that was much lower on a year-on-year basis, and the effective tax rate was higher. Morgan Stanley equal weight on the stock with a target price of around 265 rupees. Remember, the stock is trading at a 52-week low, so you need to keep that in mind. Not just that, for the past quarter, the average zinc prices were around $3,000 per ton. As we speak, zinc prices at around $2,600 on a per ton basis. So let's see how they can, optimize the mix and reduce costs from here, because prices have corrected nearly around 15%.
Okay, thank you, Nigel, for that. Interesting to see the move on Hindustan Zinc today. But moving on, United Spirits will also be in focus, because remember, those earnings were weak and below expectations. Sonal joins us with the fine print. Sonal, good morning. The volume growth came in at 13%, lower than what we expected, right?
That's right, Anisha. And looks like it'll be a royal challenge for the company to maintain its margin and achieve the volume growth that they've been talking about. If I just take you through the headline numbers, way below what we were expecting. Remember, in the base quarter, there was liquor ban in a lot of states, so that's why we were expecting good quarter this time around. Revenues, they increased by around 13%. EBITDA also went up by 22%, but way below our estimates. Margins at 9.6% is lower than our estimates of around 13.2%. Profits also came in way below our estimates at 81 crore versus an expectation on 152 crore. Margins were mainly impacted by higher employee expenses that came in higher by 24%. Ad expenses also shot up by 30%. However, we saw some decline in the finance costs that came in lower lower by 20%. The company had been talking about selling their non-core investments. Now let's talk about the segments. In the prestige and above segment, that accounts close to 63% of their total revenues. The volume growth was around 13% versus an estimate of 16 to 17%. In the popular brand, which accounts for around 31% of their sales, the volume declined by 9% versus an estimate of around 5 to 6% of increase. So that is where one of the major disappointment came in. However, management comments are again positive. They reiterated their guidance of double-digit top-line growth, and also they want to improve their margins to mid-teens. They have a con call today at 12. I'll be listening to it and update you. But for today, expect some disappointment on the stock.
All right.
We talked about ACC, United Spirits as well as Hindustan Zinc that might react to numbers today. But another big stock that will come out with numbers today is Asian Paints. What are the expectations and what is the street watching out for? Bangla will tell us more.
Well, Anisha, for Asian Paints, remember the stock is at a record high, just like most of the FMCG companies ahead of results. Yesterday, too, we saw an uptick, but most of that came in on account of the GST announcement. So the stock is trading at a record high ahead of results. A caveat, it trades at 48 times FY20 earnings, so not particularly a cheap stock. Good set of results are expected for Asian Paints. Revenue growth seen at 16.5%. EBITDA, that one is likely to grow a little higher at 24%. We're expecting the margins to come in closer to that 18.6% mark. This compares with 17.5%. The net profit on the back of increased margins is expected to be growing by about 20%. The number that we're looking at is 527 crores. That's as far as Asian Paints first quarter bottom line is concerned. Now, one would imagine why exactly is the EBITDA growing in an increased input cost environment? That is because, one, the domestic volume growth is seen between 12 to 13%. I told you about revenue growth of 16.5%. So the remainder is actually the price hikes that the company has taken. So the quantum of the price hike that the company has taken, there were two price hikes that the company did take. One was around 4.5% earlier, and then they announced one in May too. So close to 4 to 5% is the realization growth that we're expecting, 12 to 13% volume growth on a base of 3%. The management commentary on competition, input costs and demand is something that I will be watching out for. Now more so after the GST rate has come down. Does that mean higher volumes? Does that mean that they hold back on passing out the entire rate cut given higher input costs, as well as the fact that crude prices as well as the rupee have depreciated? Crude prices have increased a little more since the end of this quarter. So the quantum of price hikes the quantum of the price hikes that they've taken, is that enough to cover their operational performance or not, is something I'll be watching out for.
Okay, so you'll be watching out for the management commentary when it comes to Asian Paints, but it was the management commentary that kept the stocks like Hero Motor and Bajaj Corp under pressure yesterday. Remember, the shares of the motorcycle makers crashed in trade amid investor worries that Bajaj Auto's push to gain a bigger slice of the low-cost market will increase competition and hurt the entire industry margins. Sonia has more details on what the brokerages are saying with respect to that. Sonia, good morning. Over to you.
Well, thanks a lot for that, Anisha. A lot of EPS earnings downgrades have come in post the management commentary yesterday. So Macquarie has downgraded the stock to an underperform from a neutral. They've slashed the target price lower to 2,400 versus 2,800 earlier. They've lowered the FY19-20 earnings EPS estimates by 4 to 5%. They say that Bajaj's new strategy to sell at a loss comes after many, many years of holding on to the 20% margin. So that's come as a bit of a surprise. They would have preferred hard work of product innovation, brand strengthening, rather than just plain price cuts coming into the sector. Morgan Stanley says in the previous price war that we saw in 2004, the margins for the entire sector contracted by 200 to 400 basis points. So that could continue. They lowered margins by 3 to 6% across all three companies. And they say despite the recent correction, Bajaj could still see further downgrades in terms of earnings. Back to you.
Get a check of what's happening in the world of commodities, and Manisha Gupta, as always, joins us for more. Manisha, good morning. The crude is hovering around sub $73 per barrel mark. What are the reasons?
Well, yes, yesterday in the New York session when it started, we did see the crude oil prices gain up as the markets were getting concerned about the rhetoric between the U.S. and Iran. And, of course, the North Sea strike of 24 hours where nearly 3 oil and rig platforms were getting shut. But come morning again, and you are looking at the U.S. crude inventories increasing. There is an increase expected from Saudi Arabia, and there are warnings from G20 and IMF about the global economic growth, and that could impact energy demand. So the markets really are not looking at any risk of, undersupply, and that's pulling the premium on the crude oil prices. One thing to watch out, though, today morning would be the aluminum prices, after U.S. has said that they are open to lifting sanctions on Rusal, which is the major aluminum producer. So this really is buying the fact kind of a situation right now, and we have seen 2% gains coming for Shanghai and LME. So among the metals, it really is aluminum which is shining bright today.
All right, Manisha, thanks a lot for that. Aluminum is something that we will be watching out for, but this is the expiry week. Just a few cues coming in from the F&O space as well. Now, as the Nifty is close to about 100 points away from its record highs, the cash market flows, they've become positive. So for the second day running, we saw some purchase from FIIs, not a huge amount, but remember, purchase nevertheless as against the consistent selling that we've seen. The domestic institutional investors too pumped in some money. That said, there was also the second day running that we saw some sell come by from the FIIs in index futures. So yesterday they sold about 600 crores. They sold about 82 crores in index options, but we will tackle that in a bit. In index futures, they added close to 1,700 longs and 8,600 shorts. So more shorts added than the longs in index futures in expiry week. This is something we have to watch out for. If the markets do move higher, that would be a case for some short covering. In index options, there was more long calls added and long puts were unwound. That is a positive. Secondly, short calls were covered and short puts were added. That tells you that maybe some open upside on the maybe there is an opening on the upside while the support is seen on the downside. The put call ratio has risen to 1.8, which is higher than the usual that we see, bordering on the higher end. Just watch out for that going forward. But remember, because it's the expiry week, we may see that level sustain. A maximum open interest on the lower end has moved to the 11,000 put, so that will be a support. 10 lakh shares added out there. Roughly 10 lakh shares shed in the 11,000 call as well. Some people have also written the 11,100 put, so that is something that we will be watching out for in trade today. Two stocks I'll be watching out for, both Adani Power as well as Adani Enterprises. They come out of F&O ban on expiry week after a huge surge.